Morning, it's Tuesday, June 7th. I'm Tom Elliott and this is my market report. Well, the Dow Jones Index fell for the fourth straight day in the US last night, and the Australian market is following suit this morning. At around midday, it was down 0.5%, exactly in line with the similar fall on the American markets overnight. The reason for American shares falling is quite simple. US jobless numbers are refusing to budge. Unemployment there is just below 9%, almost twice what it is in Australia. Profits are recovering. Companies are certainly making goods, but they don't appear to be employing more workers, and of course that is depressing all sorts of levels of activity. There was an interesting article this morning saying that house prices in some parts of Florida between 2005 and now have fallen as much as 70 to 75%. That is, you can buy a house for a quarter of what it cost 6 years ago. Quite astonishing statistics if they're to be believed. And for those people who keep asking for lower house prices for Australia, be very careful of what you wish for, because you might be unlucky enough to actually get it. Locally in the share market, a few bright spots. Now, Fosters demerged last week, and already the talk is that a consortium made up of Molson Coors and Mexico's Grupo Modelo, which brews the very popular Corona beer, that they're running the numbers over Fosters. Fosters share price jumped up last week to around $4.62. It's still trading in the $4.50 range at the moment. Also, Tabcorp shareholders voted a few days ago to demerge their company. As of yesterday, Tabcorp now trades as two separate entities. There's the entity that's still called Tabcorp, which has its wagering business, and there's a new thing called Echo Entertainment, which houses the company's casinos. Now that stock is trading perhaps a little higher than what people thought, because many analysts feel that James Packer's Crown Limited will make a takeover bid. Now, if Crown were to do this, it would be by far and away the dominant casino player in Australasia. The only casinos it wouldn't own would be the ones in Auckland and Adelaide. So we'll see what happens. Anyway, Tabcorp shareholders have done quite well out of the demerger thus far. Telstra shares have been a bit of a bright spot in an otherwise very gloomy market. Now, the Coalition's telecommunications spokesperson, Malcolm Turnbull, was forced to admit yesterday that the national broadband network had gone so far now that should the Coalition win office, say in 2013, or indeed earlier if we have an election before 2013, it might be very difficult to unwind the NBN. Too much money has been spent, too many customers are being signed up. The deal with Telstra that's so important to the future of both companies is pretty much done. Now, this is actually good news for Telstra. It relieves the company of its universal service obligation. Telstra will get paid $9 billion in hard cash for its legacy copper network that, to be honest, in a few years won't be worth anything in any case. And it will allow Telstra to really refocus itself as a very customer-focused business. So Telstra shares have been steady at over $3. That's a level they hadn't seen for quite a few months. And with their high dividend yield, which the market is really looking at the moment, they've been, as I said, an otherwise bright spot in an otherwise very, very dull market. The Reserve Bank is meeting as we speak, and will announce their rates decision at 2:30 this afternoon. Like most people, I think that rates will stay on hold at this particular meeting, but I still think they might go up 25 basis points in the next 2 to 3 months. The foreign exchange markets are telling us something a little different. Now, the $8 is quite strong, 107.2 US cents at the moment. If people thought that Australian rates were absolutely on hold and no chance at all of going up, I think the Australian dollar would have gone down. The fact that the foreign exchange markets have kept it firm suggests that they at least think a rate rise is on the cards. And history tells us that the FX and bond markets tend to be much better at predicting these sorts of things than the stock market. Anyway, who knows? The share market's a gloomy place to be at the moment. Hopefully there'll be some better economic news very soon.